Hi everyone. There's something happening in the housing market that might just be signaling a shift in buyers' favor. Realtor.com's most recent data gives us some fascinating insights into where the housing market could be headed soon. So let's dive in and see what this means for you. But first, what exactly is a buyer's market? Well, a buyer's market happens when there are more homes for sale than there are buyers, which gives buyers more negotiating power and options to choose from. The key characteristics of a buyer's market include high inventory, meaning there are plenty of homes available for sale. Longer time on market, which means that homes take longer to sell, giving buyers more opportunity to negotiate. Price reductions, where sellers are more likely to lower their prices and offer concessions to attract buyers. And stable or falling prices, as the excess supply can cause home prices to stabilize or even decline. The last significant buyer's market in the United States was between 2008 and 2012. The signs of a buyer's market during that period were much more extreme, with the market flooded with foreclosures and short sales, leading to a massive oversupply of homes. The current signs signaling a potential buyer's market aren't as obvious as they were back then. First up, let's talk about current inventory. The number of homes for sale has surged by 35.2% compared to last year, making May the 7th consecutive month of growth. More homes on the market mean more options for buyers and less competition for each listing. One important aspect of the recent rise in inventory is that it hasn't been matched by a corresponding increase in pending home sales. In April, while the inventory of homes for sale saw a significant increase, pending home sales actually fell by 7.7%. We'll need to monitor the pending sales data over the next couple of months, but early indications suggest that buyer demand is not keeping pace with the growing inventory because interest rates remain high. This could result in the accumulation of unsold homes sitting on the market. This disparity suggests that the market could shift in favor of buyers rather quickly. Next, let's look at home prices. The median price of homes for sale grew by only 0.3%. Indicating that prices are stabilizing. This price stabilization is another sign that the market might be cooling down, making it more accessible to buyers. Homes are now spending an average of 44 days on the market, which is 1 day longer than this time last year. This is an important trend to pay attention to because if homes continue to spend a longer time on the market, this will give buyers more room to negotiate and make more selective decisions. Another important sign of a shifting market is the recent increase in price reductions. The percentage of homes with price reductions rose from 12.7% last May to 16.6% this year. More sellers are being forced to reduce from their asking prices to attract buyers, which is a clear indicator of a market becoming more favorable to buyers. So far, I've been reporting the average numbers for the entire US, but what really matters are the conditions in your local area. In fact, your area may already be in a buyer's market. Regionally, the South and West have seen the most significant growth in inventory, with increases of 47.2% and 34.5% respectively. Metros like Tampa, Phoenix, and Orlando have seen the highest inventory growth so far, making them potential hotspots for buyers. I'm definitely seeing a shift in the San Francisco Bay Area where I live. There are a lot more homes on the market here than there were last year, and many of them have had zero offers even after significant price reductions because there's only a handful of buyers that can actually afford them. So looking ahead, let's be honest. Even if we officially enter a buyer's market, it's probably only because there are so few potential buyers. With home prices remaining unchanged, mortgage rates still hovering around 7%, and insurance premiums on the rise, the number of people who can actually afford the monthly cost of ownership, let alone the down payment, is shrinking. Also note that many potential home buyers are those looking to sell their current homes, so they might remain on the sidelines if they don't think they can get their asking price. To recap, we're seeing increased inventory, slower price growth, longer time on market, significant regional trends, and more price reductions, all pointing towards a shift to a buyer's market. But that pool of buyers is likely to remain quite small until interest rates or home prices come down. So thanks for watching, make sure to like and subscribe, and check out some of my other videos up on the screen if you want to learn more about real estate. And if you have any questions or thoughts about the current housing market, drop them in the comments below.